Okay, think for a second about, sending money online.
Hmm,
You tap a few buttons and whoosh, it's gone, right? Seems instant.
it does.
But underneath that really seamless digital surface, there's this intricate, often hidden process. It's constantly working, sort of like a silent guardian for, well, our whole financial system and even our individual accounts.
That's right.
It's called payment screening.
Exactly. And payment screening, it's basically the financial world's version of, say, airport security.
Okay.
It's this really critical examination of financial transactions, and it's happening in milliseconds usually.
Right.
The goal is to detect and, crucially, prevent fraudulent or illicit activities.
Right.
Financial institutions, they rely really heavily on these systems. It's not just about protecting themselves or their customers, but also, complying with vital regulations, things like anti-money laundering, AML, and international sanctions rules.
And for this deep dive today, we're drawing on material from FinCrime Intelligence.
Ah, good source.
Yeah, they're a platform that really focuses on tackling financial crime, and they provide some, well, really insightful stuff for professionals in compliance and risk management.
Definitely.
So our goal here, for you listening, is to kind of cut through the complexity. We want to give you a clear grasp of the core principles, why it's so important, and the real-world challenges involved in payment screening.
Think of it as a shortcut.
Exactly, your express route to getting up to speed on this vital but often invisible layer of our financial lives.
So maybe let's start with the big question.
Yeah.
Why? Why is payment screening so absolutely essential?
Okay, yeah, let's unpack that. Why is it such a big deal?
Well, fundamentally, payment screening is, you could say, the first line of defense for banks and other financial institutions.
The gatekeeper.
Precisely. It's the gatekeeper stopping them from, often unknowingly, becoming channels for transactions linked to really problematic stuff.
Like what kind of stuff?
We're talking about dealings with sanctioned people or companies, uh, terrorism financing, and of course, all sorts of financial fraud. If you can stop a risky payment right at this stage, it prevents a whole cascade of bad outcomes later on.
So conversely, if these screening systems, I don't know, fail or aren't strong enough, what kind of trouble are we talking about? It sounds like the stakes are pretty high.
Oh, they really are. The fallout from, let's say, ineffective screening, it can
Yeah.
be huge. Institutions can face, well, severe regulatory violations, and those often come with really hefty financial penalties.
Ouch.
Yeah, and beyond the fines, their reputation can take a massive hit, especially when you're dealing with the complexities of cross-border payments. Trust is just paramount in finance, right?
Absolutely.
And failing to stop illicit activity, well, it erodes that trust incredibly quickly.
Makes sense. So, okay, when a payment actually gets initiated, what exactly are these digital detectives looking for in all that data flying back and forth?
This is where it gets really interesting, I think. These screening systems, they're designed to basically dissect various bits of information within a transaction. And often, this happens in that split second before it's fully processed.
Wow.
Imagine like a super fast analyst scanning a document for any red flags. That's kind of what these systems do, but, on a massive scale
Yeah.
and at lightning speed.
So what are the key pieces of info they're actually scrutinizing?
Well, they're looking at the obvious things first, like the names, who's sending the money, who's receiving it, their account numbers, naturally, and those really crucial bank codes.
The SWIFT codes and things like that?
Exactly, the SWIFT, the BIC, the IBAN codes, they act like, zip codes for international money transfers. But it doesn't stop there. They also dig into less obvious details, like addresses, the countries involved in the transaction, and any information about intermediary banks, sometimes called correspondent banks, that might be helping the transfer along.
Correspondent banks, right. That adds another layer, doesn't it?
It really does. Because when money travels across borders, it rarely goes direct. It often hops through these intermediary banks. So effective screening needs to look at all the parties in that whole chain, not just the start and end points.
The source material we looked at also mentioned message fields and even free text fields. Why are those getting scanned too?
Yeah, those can be incredibly revealing, or at least people try to hide things there.
How so?
Well, sometimes individuals trying to, fly under the radar might embed subtle clues or maybe even coded language within the standard message formats, like the old Swift MT messages or the newer, richer ISO 2022 form.
Hmm.
And they might also try to hide risky details in those unstructured free text fields. The reason for payment box, for example, hoping it slips past the automated checks. It's like trying to hide something in plain sight.
Sneaky and concerning. So, okay, the system grabs all this data. What does it actually compare it against? Must be a massive database, right?
It is. It's a huge, constantly updated network of reference lists. Probably the most critical ones are the official sanctions lists.
Issued by governments.
Exactly. Like OFAC in the US, the EU lists, the UN lists, the UK's HM Treasury list. These name-specific individuals, companies, even entire countries that financial institutions are legally forbidden from doing business with.
And that's not the only place they look, is it? There must be other lists, too.
Oh, definitely not. Institutions also maintain their own internal lists, watch lists, blacklists maybe, based on their own risk experiences.
Okay.
Plus, they screen against databases of politically exposed persons, PPPs.
Right, people in positions of influence.
Yes, individuals holding prominent public roles who might, unfortunately, be at a higher risk for things like bribery or corruption. And increasingly, these systems are pulling in other data too. Adverse media screenings, indicators of high-risk countries or regions, trying to build a filler risk picture.
Now, the FinCrime intelligence material highlighted two main ways this screening happens, real-time and batch. Can you break down the difference there?
Sure. Think of real-time screening as happening, well, right now, as the transaction is initiated.
Like at the checkout counter, but for payments.
Kinda, yeah. The system analyzes the payment details immediately, right then and there. And it can actually block or at least flag a suspicious payment before it even gets processed. It's that immediate gatekeeper function we talked about.
Got it. And batch screening then sounds like it happens later.
Exactly. Batch screening usually involves analyzing large files, big volumes of payment data, often after the transactions have already gone through.
Why do that?
Well, it might be used for things like post-transaction monitoring, maybe looking for broader patterns, reconciliation, or sometimes it's used when real-time screening just isn't practical for certain types of really high-volume, low-risk payments, perhaps. It's more about analysis across a big data set.
The article also mentioned something called fuzzy matching. That sounds intriguing. Like it's designed to catch things even if they're not a perfect fit.
You've got it exactly. Fuzzy matching is well, a really valuable technique. It lets the screening systems identify potential matches even when there are small variations or, typos in names or other key bits of data.
Can you give an example?
Sure. Let's say someone on a sanctions list is named John Smith. Standard matching might miss a payment to John Smith.
Slight spelling difference.
Right. Or maybe J. Smith. Fuzzy matching algorithms are designed to spot those near misses. It helps massively reduce what we call false negatives. That's when a genuinely risky transaction slips through because of a tiny data discrepancy. It's about catching the likely intent, even if the spelling isn't perfect.
This whole process, it sounds incredibly complex. What are some of the major, let's say, headaches or challenges that banks and institutions face when trying to do this effectively?
Oh, there are definitely quite a few significant hurdles. Probably one of the most persistent issues is dealing with false positives.
Okay, what's that?
That's when a perfectly legitimate transaction gets incorrectly flagged as suspicious by the system.
The system's being overcautious.
Exactly. And this creates a huge manual review workload for the compliance teams. They have to investigate all these alerts. It's like, constantly checking smoke alarms that go off when there's no fire. It eats up a ton of resources.
I can imagine. And it probably slows things down for legitimate customers, too.
It absolutely can. Delaying legitimate payments, impacting the customer experience. It's a real balancing act.
So false positives are a big one. What other difficulties pop up?
Well, data quality is just a constant battle. If the information in the payment message itself is incomplete or maybe inaccurate or just badly formatted, that can really undermine how effective the screening is.
Garbage in, garbage out, basically.
Pretty much. Then there's the challenge of list update latency.
Meaning delays in getting the lists updated?
Yes.
Huh?
The time lag between, say, OFAC, adding someone to the sanctions list, and that update being fully live in every bank screening system across the globe,
Yeah.
even a short delay creates a potential window for illicit transactions to sneak through.
And I guess the people trying to move illicit funds are always looking for ways around these systems, too.
Oh, absolutely. Evasion tactics are, well, they're constantly evolving. It can be simple things like slightly changing a name, using different translations, aliases, or much more sophisticated stuff involving complex shell companies layering transactions across multiple jurisdictions. And that global aspect, especially with correspondent banking, just adds layers of complexity. Figuring out who's responsible for screening what part of a payment that bounces through 3 different countries can be really tough.
So, given all that, how are institutions fighting back? How are they adapting to these ongoing challenges?
The FinCrime intelligence piece points to several key strategies. Um, a major trend is definitely the increasing use of more advanced technology.
Makes sense.
We're seeing a move towards combining those traditional rule-based filters with much more sophisticated machine learning models.
How does machine learning help?
Well, ML models can analyze just vast amounts of historical data, learn complex patterns that signal suspicious activity patterns humans might miss, and actually improve the accuracy of the screening over time. And that's really crucial for tackling those costly false positives we mentioned.
Okay, that sounds promising. Now, shifting gears slightly, with all these intricacies and challenges, what do the regulators, the financial watchdogs around the world actually expect from institutions when it comes to payment screening? It can't just be a case of buy a system, plug it in.
No, you're absolutely right. It goes way beyond just ticking a box. Global regulators have very clear and, frankly, increasingly stringent expectations. They really see robust payment screening as a fundamental pillar of a bank's whole compliance program.
Yeah.
AML, counter-terrorist financing, sanctions, the works.
So what are some of the specific things they're looking for? What do banks need to show them?
Okay, first off, regulators expect comprehensive screening. That means all inbound and outbound payments need to be checked against the absolute latest up-to-date sanctions lists and any other relevant watch lists, no exceptions.
Okay, comprehensive coverage. What else?
Secondly, institutions need really well-defined, documented processes for what happens when a payment is flagged.
The follow-up?
Exactly. How do they investigate? How do they decide whether to release the payment, block it entirely, or maybe escalate it for deeper investigation? And crucially, they need to document the reasoning behind every single one of those decisions. Maintaining detailed audit trails and records of the whole screening process is, well, it's non-negotiable for regulatory reviews.
Right. Transparency and being able to prove you did the right thing. What else is on that regulatory checklist?
While ongoing tuning and validation of the screening tools themselves is vital, regulators want proof that institutions are constantly monitoring how well their systems are working, identifying weaknesses, and making adjustments to optimize performance and, reduce errors like false positives or negatives.
It's not set and forget.
Definitely not. And maybe most importantly, the people involved need proper training. Relevant staff across the organization have to get thorough, ongoing training on the policies, the procedures, the tools, and, critically, the latest regulatory requirements. Ultimately, institutions have to be ready at any time to clearly demonstrate how effective their screening controls are during audits or regulatory exams.
It really sounds like a continuous cycle, doesn't it? Improve, adapt, validate, train, all driven by that regulatory oversight.
That's a good way to put it.
The source material also really emphasized the role technology is playing now. How is tech really changing the game in payment screening?
Yeah, technology is, well, it's truly revolutionizing payment screening. We've already touched on AI and machine learning.
Right, for making it smarter, reducing false positives.
Exactly. But there's also natural language processing, NLP. That's another really powerful tool. It's being used more and more to analyze those tricky free text fields in payment messages.
The reason for payments kind of fields.
Yes. NLP can help uncover hidden risks, contextual clues, maybe coded language that older, more basic systems would completely miss.
And it's not just about finding the bad stuff better, is it? It's also making the whole process run smoother.
Precisely. Efficiency is a huge driver, too. Things like real-time API integration are becoming standard.
API.
Application programming interface. Basically, it lets the screening system talk seamlessly and instantly with the bank's core banking platform or the payment processing system. That makes the screening itself faster, less disruptive to the payment flow.
Okay.
And then you have workflow automation tools. These are really streamlining the whole process after an alert is generated, the investigation, the documentation, the escalation, the case management. It reduces the amount of manual clicking and box ticking, freeing up those compliance experts to focus on the really complex, high-risk cases that need human judgment.
So the big picture trend is towards systems that are faster, definitely smarter, and increasingly automated, really, to cope with the sheer volume and complexity of money moving around today.
That sums it up perfectly. These technological advancements are just essential for financial institutions to keep pace. Keep pace with the evolving threats, keep pace with the increasing regulatory demands, all while trying to run an efficient operation.
This has been, well, a really fascinating deep dive. It shines a light on a critical part of our financial world that, honestly, most people probably never think about.
It is indeed. Payment screening really is a vital and, as we've discussed, a continuously advancing defense against the persistent threat of financial crime. And that threat exists in an increasingly interconnected and, frankly, complex global system.
Yeah, and it really makes you pause and think about the sheer scale of it all, doesn't it?
Hmm.
Just consider the staggering volume of financial transactions zipping across the globe, literally every single second. And behind all that, these incredibly intricate systems are constantly working, trying to identify and prevent illicit activity. It's this relentless, ongoing battle innovation on one side, evasion on the other.
A constant cat and mouse game.
It really is. So maybe a final thought for you to ponder. How do these unseen processes working away in the background ultimately impact your own financial security? And
Yeah.
what about the stability of the entire financial system we all rely on? It's definitely something we're thinking about long after this deep dive.